This is Randy Finney with Right Side of the Chart, and this is an early session update for Wednesday, May 20th, 2020. Just want to get a quick one out there, talk about the indexes real quick, gold and some of the precious metals, including palladium. I'm going to do an update there because we have an active swing trade on palladium, and there are some developments to note today. All right, start out with the Qs, and again, just to recap, I already put a post out last night. This was covered in last night's video as well. That we had. Well, let's start with the S&P 500. So we'll go to SPY, and you had what again on face value appeared to be very everything you want to see in a breakdown, or at least I should say not everything I want to see, but everything most traders might assume to be a valid and breakdown. And we had a nice clean-up trend line on SPY. We had impulsive selling, so that's a check mark. When you break down a break below a support level, such as a trend line or a price support level, or bearish chart pattern, as I like to say, the redder the better. You want to see impulsive selling. Now, where it didn't get check marks for me is, most importantly, at the very same time this happened, that brought QQQ down to support and NQ. And they both successfully tested and held. It says, so I said in last night's video, if they held, then you'd most likely that would result in a false breakdown or a whipsaw signal in SPY, and that's what we had. So and as I often say, fewer things in trading are more bullish than a failed breakdown because of the reasons I cited this morning. Shorts may pile in, longs may have their stops hit, and then they realize when the support level is recovered again, that the breakdown is foiled and the shorts cover and the longs jump back in, and maybe some more longs buy. And at the same time, like I always say, this is why I watch multiple indexes. There's a different subset of traders. Some people are only trading SPY, and they're probably only looking at the SPY charts, whereas whether I was trading SPY or QQQ or both, or even another index related ETF, or heck, index stocks for that matter, Apple or Amazon, Microsoft, you got to keep an eye on these. So you don't see it here. You see it in the after-hours session, edit chart properties. That's because that last two dump. There it is. So we hit that trend line right there perfectly in QQQ last night. So that's what caused this. And again, it's like I said, fewer things are more bullish, at least near term. Now, where do we go from here? That's what I want to do the video on. Things to watch for. But that's SPY. Let me just show you again. Oh, and the other non-check mark for me, or we'll put an X, to question the breakdown, is when it occurred. I've said this just recently over the last week or so. We had a big move into the close one day, and I've said it many times over the years. Take everything you see. When you get a breakout or a breakdown, either way, on a security, whatever it is, a stock, the indexes you're trading, and it occurs in the final minutes of trading, take it with a giant grain of salt. Wait for follow through the next day. These are when ETFs and mutual funds end up squaring away their positions at the last minute, and so you get a flood of buy or sell signals in the final minutes of trading. These are daybreak lines here. Right here, there's a daybreak line, 4 p.m. So again, you have to take that with a big grain of salt, and don't. Bottom line is, don't use that as a buy or sell signal. Wait to see if you get follow through the next day. And so that's what happened with SPY. And so here we are. Those that might have shorted at the end of the day yesterday, shorted below that trend line, are now covering, and so you get this rally. So what we're going to watch for, these trend lines are still valid. Believe that they're valid. We have enough reactions there. Sometimes I will exclude a spike below, especially, again, for everything I just cited, the reasons when it occurred, why it occurred. You could probably even have done that back there on this one. That's how I had that trend line, but there's a little spike below, and you still have a clear trend line with even more reactions there. So I always say trend line drawing is an art, not a science, but if you have enough reactions on a level, then I think it is. So this is still a trend line to watch. We could still break that. We could still pull back to it and ride up for a while. Like I said, this is certainly near-term bullish. And the other thing I wanted to mention too, well, let me go to QQQ for a second here. So here's the Qs. The other things that I'm noting today is, I'm going to turn off all these lines for a second. What is a near-term bullish development, other than of course the price, but it is still something to watch for potential bearish development, and that is the posture of the PPO. Now, first and foremost, we have the divergence that's still very much intact, meaning the indexes, in this case QQQ and SPY, are making higher, continue to make higher highs in an uptrend, with the divergences significantly lagging behind. These are a series of lower highs, and that's what the term negative divergence is. Prices diverging against the momentum indicators. Now, what I've noticed today, what stood out to me, again, get these lines off here, is the lines kissed and bounced. A lot of traders will use, and I like to factor it in certainly to my trading as well. It's not, I don't use them as standalone buy and sell signals, but bullish and bearish PPO crossovers. That is when you have a PPO line here. I know some of you don't have, some charting programs don't give you a PPO for whatever reason. Use a MACD. It's very similar. It's a close cousin to the PPO. Use the default settings, 12.26.9. This is your signal line, the white line. And when you get a bearish crossover, that is a sell signal. Again, I don't use it as a standalone, but I'll use it in confirmation with other things. And I also use it to help confirm divergences, because then at that point you effectively have a peak or a high put in on the PPO. So if you're drawing divergence lines, then it's usually safe to say there are some whipsaws, but that you put in a high and you're going to go lower, and that helps to confirm the divergences. Otherwise, as I like to say, these are momentum indicators, and if the momentum is pointing higher, now see, they kiss. This is what I was talking about this morning. If you can see it on the video. These lines kissed. They were poised. QQQ was poised to make a bearish crossover. 9 times out of 10, when you see the lines start to roll over, especially at high levels, you're going to get it. But every now and then they kiss, and that is near-term bullish, and that's what's happened today. But you can see, again, they're pretty darn effective. And again, they're one of many tools to incorporate in your trading, but we're just going to mark here the last few bullish and bearish crossovers, and you can see what happened in price. You got a correction there. Once that bearish crossover occurred, you had a bullish crossover here. It said, go long. Bearish crossover there, go short or get out of your longs, and a bullish crossover right here. So they're pretty darn effective in capturing on these, whatever time frame you're using. You can use this on a daily, a weekly chart. But what happened is there's a no sale. So it again reinforces, what I was saying last night in the video, that if QQQ bounced and held support, you don't have that sell signal, the next sell signal we're looking for, and that's what happened right there. So that is certainly near-term bullish, and it's been reflected in the bounce so far off, where we closed yesterday. When it, again, had we broken that trend line support on the Qs and the the horizontal support level on NQ, we would have gone down quite a bit lower and had the bearish crossovers, but we didn't. So that's where, in some cases, again, a sell signal looks so close you can taste it, but you don't get it. But more importantly, what happened is that the SPY, you have that whole subset of traders trading ES and SPY, and they saw what looked like a clean sell signal, and they weren't watching the Qs, even though the QQQ is not representative of the entire stock market as well as the S&P 500 is. Unfortunately, it has the biggest names in there, the same top weighted components of the S&P 500, and many of the same stocks overall. So when one bounces, the other will bounce. That's just the way it works, and that's it. So where do we go from there? Well, a couple things to note. Usually when you get when momentum is waning here, especially when you have the divergences, things like we have, it is not uncommon to see the PPO kiss, those lines kiss, where you look like the PPO is rolling over and you're going to get a bearish cross, and you don't. We had a kiss there, a second kiss, and then we finally got it. So usually you're going to get it. Sometimes you get those whipsaws. Here's another one. There was a whipsaw, but the lines kissed. So I just want to point out there was a few right there. It looked like we were going to get a bullish crossover. We didn't. Rejection. These are kisses from underneath, and it kept that trend intact. So we're going to watch this. That's one thing we're going to watch for, and that would be, again, a bearish crossover. Once they kiss, they often kiss again or cross shortly after. So there's, like I said, here's another example right there. Looked like they were poised to cross over. They didn't. We had a rejection. There was another drop in the Qs at that point, and you can go through this on your own and take a look at that. But so these are the things I'm watching for. And again, it's really not anything much different from yesterday. We have that uptrend line right here on QQQ. We're looking for we need to see now a bearish crossover, although I have DH4 here, divergent high. It's not a confirmed. It's what I call an unconfirmed divergent high, and that again, it's just a term I made up. It says that when you have negative divergence, like you do, but yet the momentum indicators haven't put in a lower peak, they need to put in a lower high below these lows right there. Then you'll have it. And I say that lower high is effectively put in when you have the bearish crossover. So that's what we're waiting for. And right now we're in rally mode because of the whipsaw signal. So let's go back to SPY. There it is, whipsaw signal. There it is, a whipsaw right there. It looked like the lines were going to cross over, and it was pretty much a kiss. And they're flattened out right now. So the momentum on the SPY, these momentum indicators are flattening out. They were poised to cross down. Sometimes they will do that. And again, this is why I want to do this video, is that this is certainly, or was near-term bullish, may have some more upside to go here, may not, because sometimes here's SPY right there. Look like we're going to cross. We kissed, and here we kissed, and we started flattening out for a while, but then finally the bearish crossover came. So that's what I'm looking for here. One of many things. We have effectively a lower peak right there. These lines, the PPO line hasn't yet bounced off the signal line. The PPO line's the blue one, signal line's the white one. So that's what I'll be looking for. So anything goes today. If we get a late minute dump, same trend lines that we've been highlighting, same ones that were highlighted yesterday. Just because we had a whipsaw doesn't mean the next one can't be the real deal. But it's not going to be unless the Qs break down. Let's go to that real quick and look at NQ. All right, this is the NQ chart. Remember, we had the breakdowns yesterday or the previous evening in these uptrend lines, but we bounced and hit that 9,300 support. And so yesterday that was the level. Yesterday morning that we had to watch take out. This was, again, that was the end of day dump. So that was we went through it, but not nearly impulsively. That's a little tiny slight move through and a quick recovery, and so that's not what you want to see. You want to see a solid break, and more so it was that momentum fueled overshoot. You had that downside momentum into the close yesterday, and that's what did that. So by all accounts, at least by my book, that's a successful test and defense of the 9,300 level, and that's what carried us up to where we're at today. The divergences continue to build. You can see the negative divergences down below here. But a couple other things we're going to look for are, again, going back to the PPOs, there's a lot of useful information you can extract from the PPO, not just those crossovers. Now we're not anywhere close to the crossover here on the futures. It's tracking the same index, but you're having round the clock trading, in the future. So you're going to see different things on the indicators. But you do have the divergence. But one thing you need to see is that signal line, the white line, the 9 EMA, needs to cross down below the 0 line. I didn't draw a perfectly parallel line there, but you can see when it's above the 0 line, it's bullish, and when it back tests, it acts as support and it keeps the trend. So it's told you all along here that trend indicator is bullish. Bearish when it's below. Again, I'm looking at the white line. I use that because it's the last of the two to cross. So there you had correction mode. Here you had rally mode. Here you had correction mode. So these are some of the things that I'm looking for right now in the Qs and NQ and the futures. Of course, what we need to see is the PPO here turn back down. If it keeps going up, because as I said, this is only unconfirmed divergence. This is a momentum indicator, and as long as the momentum is up, the market moves higher, then these lines are going to move higher, and then if they move much higher, they're going to take out these previous highs right there. So as of now, divergence is still intact, so there's still very much a possibility for a reversal today. And now, I'll leave it here for the indexes. Now that 9,300 has been tested once again, especially with an impulsive reversal off it, it makes it even more a more significant level than it was yesterday when I highlighted it. So now a break below 9,300, I suspect if and when it comes, we won't just limp around, meander on through. It'll probably be an impulsive drop. I'm sure there's a lot of stops right there for longs and a lot of shorts that will jump in if and when 9,300 goes. So I would suspect, especially in light with the divergences, If they, again, if they play out soon, if 9300 goes soon, if 9300 goes 2 months from now, well, everything you see here on this 60-minute chart isn't going to apply anymore. If it happens soon, we'll still have the divergences there. Let's see, ES, same thing. ES needs to take out this trend line. What happened? The breakdown on ES last night. Remember when SPY broke the trend line? This was the line yesterday morning. I said we had to watch on ES that a break of that would trigger the next sell signal. I'm talking of this downtrend line. We back tested it. We had a breakout there that evening before yesterday. Breakout and a back test. We were successfully back testing this trend line, and that was the breakdown, i.e. the false signal, the whipsaw signal right there. And so what I've added since then is this uptrend line right now. We can maybe pull it right here. Yeah, let's give or take right about there. Let's just capture these lower candles to be safe. So there's a trend line to watch in ES. Any new high in ES, remember guys, ES, if you're not familiar, ES are the S&P 500 E-mini futures. We're close to the previous high. Any equal or new high at this point, go like this, that'd be an equal high or a new high. Anytime soon, should we continue to rally from here, will be not only a divergent high, it'll be pretty steep. We'll have sharp divergences. You know, some divergence, typically the bigger the scope of the divergence, this was long in scope but not very steep. These lines were about equal, about flat lines on the RSI, but higher highs, so that's divergence, and a slightly, sloping downtrend line on the PPO led to a pretty darn big correction. And this one was pretty big in scope as well, about equal, and led to a pretty big drop. This time around, they're not as long, and they could certainly continue to build. So this is what I talk about. And I know some people hate to hear it. There's a myriad of possibilities, and all we can do is monitor these charts and see if what happens at the time. In other words, if we get a big reversal, we break support, and these divergences are still in place, and that tells me that we're likely to see something along these lines, a much bigger drop than just a minor pullback. And so again, to just kind of hone back in on what to look for. Well, these divergence lines here, because that was the last time we had divergence at this high right here. That's your divergent high. Soon as we can make not much more, an equal or higher high, we'll have divergence. Again, it could be there, could be there. We can form this, this wedge can start forming, and prices could bounce up in here. But divergence is not a sell signal. A break of support is. So there's a trend line to watch. And again, should we make an equal or higher high, at that point we're going to have the divergence intact. And like I said, it won't be as long as it's divergence. And that's not a hard and set rule, by the way, guys. It's again, typically the larger the divergence, or the steeper the divergence. In other words, sharp new highs against significantly lagging indicators down there. So that divergence, what I'm getting at, could easily play out for a move just like that, because it's a little more steep. Or let's say the market wants to rally up. The S&P 500 has the 200 days. We're a little above the 200 exponential now, but remember, we're pinched between that and the 200-day simple moving average on the daily chart of the S&P 500 and SPY. So one scenario too would be to extend these divergences out. There's plenty of room to do so, and then correct at a little bit higher level, maybe later this week. Instead of today or tomorrow, or maybe even next week. And then finally, of course, maybe these divergences get taken out, and that's going to be pretty darn bullish if that happens. At least it's going to chip away at making the case for a sizable correction here on the 60-minute chart. All right, let's get away from the stock market. The other thing I want to touch on just real quick is the precious metals. I told you there's seen some setups forming, potential setups, and more so in silver, gold. Like I said, I still like gold. The U.S. dollar and euro is what I'm watching closely. And the euro has gone on to put in another divergent high, but it's still setting up. Remember, we had negative divergence yesterday, but we went up, had another thrust up today, and I'm covering the euro because it's basically an inverse chart to the dollar, not exactly, but close to, because this is the largest component. So there's some pretty big divergences. As I said, if I'm going to go long gold or long silver, the precious metals, I want to see make a case that the euro is likely to go up, because when the euro goes up, the dollar falls, which is net. That's bullish for gold and silver. So a rallying euro is also bullish for gold and silver. So right now we're not there yet, but we're setting the stage for a potential reversal here. We're coming up to that previous high. It'd be nice if I could see, let me see if I zoom out a little bit, some more solid resistance. I love divergences, but I also like divergence, to see negative divergence on a security overbought at resistance. And we kind of have that here now. As I zoomed out on the euro. What we're looking at here is that 110-ish level, right about where we are right now. You can see has been this trading range right here, just like the stock market's been in a trading range. The euro has as well, and it also is at the top of the trading range. It popped it briefly once or twice there, but there it is. So yes, you have the euro at support with negative divergence. That sets the stage for a correction there. Kind of not meshing well with the what I'm seeing in the stock market. So my convictions aren't as strong on the short for silver. I'm going to get to that in a second. But palladium too, I want to talk on that. Let me just show you the dollar real quick. Likewise, just like the euro has that negative divergence, the dollar DX dollar futures has some nice, and we didn't have it before. Now we do have some really strong divergences. There's a previous low. This was a divergent low right there. And so these are the things I look for. I look for divergent highs followed by correction. I look for divergent lows to foreshadow a rally. Look for a divergent high. We had one there, little correction. The divergence extended once, another correction a little bit bigger. It continued to extend. This is just like the stock market. Just like right now, ES, NQ, SPY. Divergence, you get little corrections, but when those divergences continue, it's just one bigger divergence, and that usually leads to the bigger correction. But at this point in time, we have positive divergence, so I can tell you I'm on watch for a reversal. It's tough because I don't have a very clean downtrend line. I don't want to force one, so I don't have one on the chart, nor do I have a very solid resistance level to pop, because I know I tend to repeat myself, but I think the stuff bears repeating. Divergence is not a buy signal. Divergences can continue to extend for quite some time while the trend remains. Sometimes they end up even getting burned through, meaning negated. So, however, they're pretty darn accurate, and I'd say that 85% or more of the time they end up playing out for a trend reversal. So that's what we're looking at here. If that happens, the dollar rallies. That should put pressure on gold and silver. There are other factors, as I mentioned, supply and demand forces, maybe the stock market's rallying. If the stock market continues to rally, that will help the case for a short on gold. And please do not be confused if you're new to the site. We have a trade on gold, a long-term trade. It's very profitable. We've already hit 3 of our 4 targets. There's still a 4th target, and it's what I refer to as a long-term trade, a trend trade. Been in that one. It's a key long-term holding. It's also a swing trade, but so my long-term views on gold are still bullish, whereas shorter term, these are tactical trades. Even a bull market or a bear market, I'll swing trade these rips and dips all day long. So where we're at, there it is. I can't make a screaming case to short gold. Just like I had said a few weeks ago when I was bullish back here, right here, made a case to go long on both the breakout above this symmetrical triangle pattern and the back test. That was the last long entry. Mentioned the divergence here, the likelihood for correction, especially if we broke that level, we got that. But at that time, I was, saying silver might outperform gold. Looked like it was poised to, and it did. So now I'm focusing my efforts back on silver. If we get a correction, I do believe that silver is going to outperform to the downside. In other words, more meat for your bone. If you're going to take $1 and go long or short a security, why go so long or short something that you might make 10 cents on when you can go with something that you probably make 20 or 30 cents on? That's the way I look at things. So that would be the trade right there, and there it is. Let me zoom in a little tighter. We're zoomed way out here. Let's go to monthly, and so we can see it very well. Okay, so the charts are in alignment right now. Again, negative divergence on the euro, positive divergence on the dollar, negative divergence on silver, which I don't see on gold. And I don't know. I might have to. Let's see if I can draw a trend line here. Again, I don't try to force these if they don't fit. But I think there's enough. We have, I like to see at least 3 distinct reactions. There's 1, 2, 3. We've been reacting on there, though, and we're still, those are little intra-period spikes, the little candlestick shadows down below, or yeah, the shadows. And so we're on there. So yeah, that is valid. So you have this little bearish rising wedge. No sell signal. Trend is still bullish right now on silver, but again, I can tell you if a break of this 1773 level should do the trick, or rejection off this trend line, and targets are right there, and possibly if things get really ugly all the way down back here, and that'd be a pretty nice drop, you know, on silver futures. And if you're trading the ETF SLV, it should be around the same thing. You're talking about almost 12% max, and again, that would be a maximum target. We'll just see how the charts developed. Palladium, I haven't updated that in a while because we've been kind of grinding around, but what we had, and this is PA, Palladium Futures. I'll get to PALL. That's our proxy, since the official trade ideas are not futures, because I know some traders don't have access to futures. Bigger picture, let me back up a little bit. You have to see where we were before. We had this negative divergence right here. That's first and foremost after a hell of a run, very overbought, overextended run in Palladium. It is and was and still is as much a fundamental a trade based on fundamentals as it is technicals. Fundamentals being that Palladium is primarily used. One of the most widely uses in Palladium is for emissions control in vehicles, and so with the economy, the global economy, pretty much coming to a halt, it only stands to reason that we'll see a decline in vehicle sales, which we already have, and so again, that's the fundamental case. But again, the technical case was the negative divergence, which also that divergent high formed an ascending broadening wedge right there. We broke down, powerful sell signal confirmed with what you want to see, and then we also took out this primary uptrend line right here. So that's that. We came, overshot it. We had a lot of volatility. This was when the stock market plunged and then recovered. Everything went haywire, especially a lot of futures. But since then, trading normalized. We broke that trend line again. Near term, this was bullish the other day because we popped at that downtrend line, but we are now back testing. So this is what I wanted to highlight. We're back testing both the trend line, and we're roughly, this is a rough area, a rough resistance around 2116 or so. It was support. Again, everything got wonky here and that volatility after the big drop. But that's where we're at. We're at resistance now. You can continue to backtest. That's one thing about shorting a backtest is if you continue to backtest, you inch higher. However, it is objective, and I wanted to mention that. So for those of you either in the trade and you want to add to it, and again, let's look at PALL because that's our proxy if you don't trade Palladium futures. This trade is based off the daily chart, and that's it. You know what? I'll have to, yeah, well, maybe we'll leave that stop alone. We had the stop originally. We shorted it way back here, went down, hit our first, shorted over here, hit our first and second target right there. I think it was close to a 20% profit. I know it was well in the teens. Have a third target here and a potential to add additional targets. And when we hit that second target at some point there, I lowered the stop down to assure a profit. We're getting close, and again, I'll leave that up to each of you whether you want to leave it there at 201. And did I do a daily close? Probably should do a daily close. There's resistance right there, and that's where it's set, and it's pretty tight to the resistance. So I just want to mention that we're back testing resistance. It is an objective short. Now again, that stop would be for anyone that shorted back there, or break below 207. If you were to short today, then you would definitely want to use a wider stop. And here's a near-term trend line resistance there. And again, if you're targeting at this point, since we already hit T1 and T2, I would say a short entry here. I would use this as my preferred target if I were to short here today, if I didn't already have a position, because we already hit those two. I think when we reverse, we'll probably come on down here, 125.20. That is about, if that target's hit, should be about 39, almost 40%. And because of that, if you're targeting 40% and you use say even a 4-to-1 risk reward ratio, which is extremely attractive, you can allow yourself a 10% stop, and that again is a very objective trade. It's objective because we're bouncing back to resistance, and the risk reward is attractive again if you use a 10% stop. That is a 4-to-1 risk reward ratio. So there's a trade idea for those of you again that don't have a position in PALL. And some people say that the brokers don't have it. I'm looking at Interactive Brokers right now, and they are reporting that they have plenty of shares. There's a green bar. They have a feature you can put on there. They say they have at least 4,000 shares available to short right now. So there should be, I would imagine, some at other brokers as well. All right, let me get the video out to you guys. That's just the silver daily. I covered this in yesterday's video. So same story on silver. We're still at that 1633 resistance. And again, it makes an objective short, somewhat of a pot shot because we're in a strong uptrend without any sell signals. So it's what I call a pot shot, somewhat of an entry. But again, with a stop above, or wait for a reversal, a sell signal, and then you can see some of these targets on the way down. I'll probably have to update this. I think I did that in yesterday's video, gave you targets for SLV if you're a ETF trader. And again, I don't have the two things. It's not an official trade because I don't have the confidence enough. There's not enough in the charts. We need to see. We have divergences, things like that, but I haven't seen any hard sell signals on the dollar, or buy signals on the dollar, sell signals on the euro, or even on gold and silver. And silver is mostly going to follow gold, so I can't make a strong case to short gold right now. And I'm on it, in my long-term accounts. Don't have any position in my active trading accounts, but I just wanted to pass this along, as an unofficial trade. And I'll try to find some more. I need to run out today for a little bit, and I'll be back this afternoon. So let me get the video out to you guys, and we'll go from there. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.